Okay, so what kind of situation do we currently have on CHF JPY? Now, from a weekly perspective, let's start our analysis. Now, on the weekly, we have a market that clearly has created a very strong impulse. After the impulse, if you want to measure the retracement, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse, and by taking your Fibonacci from the low to the high, you can see that the market is currently rejecting the zone in between the 0.382 and the 50% Fibonacci retracement. What we can also notice from a weekly perspective is that the market is currently rejecting a very strong structure level. In fact, it was acting as very strong support here. The market broke it to the downside, was turned strong resistance. Now that the market broke it back to the upside, this is strong support, and in fact, the market is currently rejecting it quite nicely. Let's go up again on the monthly time frame and what we can grab from the monthly. Now, on the monthly, it's pretty clear that, first of all, the market has created this W formation. After a W formation, what do you want to see? You want to see the market make a pullback to the neckline, aka to the previous resistance, now turned support from a monthly perspective. And in fact, that is exactly what the market did. And after the pullback to the structure, the market started the next impulse to the upside. And specifically, you would like to see the market continue to the upside to create a higher high and complete this impulse correction and impulse pattern to the upside. What we can also notice is that here on the monthly, if we want to measure this retracement, we simply have to take our Fibonacci on the monthly impulse, so from the low to the high, and we can see that the market rejected 3 times the 0.618 golden ratio Fibonacci retracement, loading up the liquidity for the move to the upside. Let's go back down on the daily time frame. So monthly and weekly both showing a bullish scenario. If we go down on the daily time frame, what kind of situation we get? Now on the daily, we know that the market rejected exactly this zone here. Now, if you're asking yourself why, also on the daily time frame, this was a strong demand. It is a strong demand area for CHF JPY. In fact, in all this impulse to the upside, there is one candle which is not related to the move, and is exactly this red candle here, which now is strong support. And in fact, the market rejected the zone quite aggressively. What we can also notice is that in the move to the downside, the market found support here, broke to the downside, creating an equal high, and again, it's finding support at this area. So creating a not perfect, but quite clear inverted head and shoulders here with this spike to the downside to test this level as the head, so basically as the fake breakout. So this is at the moment the daily support zone for CHF JPY. Now, before I will show you how we are approaching this with students, let's go and see what we have from a COT perspective on the CHF and what we have from a COT perspective on the JPY. So what hedge funds are currently doing from a CHF and JPY perspective. Now, if we check what we have from a CHF perspective, we can see that currently we're sitting with 1.6K net positions from the positive 8.9K that we had here. So a decrease because clearly we have seen a lot of longs getting closed and shorts getting added. In fact, currently we're sitting with 9.1K longs and 7.5K shorts. If we can see what we have from a JPY perspective, what we can see is that we had a massive shorts closing with the last report, with 10K shorts getting closed, and at the same time also longs getting closed, meaning that they might not be interested in the longs that much and that this is just a profit taking before they will be adding again from a better price, which is good for our overall upside view for CHF JPY. Currently, we're sitting with 22K net positions, and we will see what the next report will bring us. If we go back to the chart, at this point, it's quite clear how we're supposed to be approaching this, as usual, in a reactive way and not predictive, because trading is reactive, not predictive. So how we will be approaching this with students? We have most of our confluences indicating for a possible move to the upside, meaning that the best probabilities might be to the upside. So the way in which we will be approaching this is as usual, monthly, weekly, and daily are for direction. The 4-hour is for entry. We will be monitoring with students price action inside of this area on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And if the market will actually provide to us one of our valid entries on the 4-hour time frame inside of this area, we will be taking a nice long with a good risk to reward and good probabilities for the move to the upside. Now, one last thing, if we will see the monthly candle in 5 days close with this shape here, so a very long wick, then we have even better probabilities for the continuation to the upside. So to be more conservative, it might be a good idea to wait for the close. I spoke about that candle formation many times also on my YouTube videos. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.